Disclaimer: Reggie and Royal's analysis and insights are based upon data gathered by it from various sources believed to be reliable, complete and accurate. However, no guarantee is made by Reggie and Royal, or Vision Associates LLC as to the reliability, completeness and accuracy of the information so analyzed. Reggie and Royal is in the business of gathering information, analyzing it and disseminating the analysis for informational and educational purposes only. Reggie and Royal attempts to analyze trends, not make recommendations. All statements and expressions are the opinion of Reggie and Royal and are not meant to be investment advice or solicitation or recommendation to establish market positions. Our opinions are subject to change without notice. Reggie and Royal strongly advises readers to conduct thorough research relevant to decisions and verify facts from various independent sources. Copyright 2021 Vision Associates LLC. All rights reserved.
Ever feel like Bitcoin is strapped into a roller coaster seat? Every time the bond market jumps, Bitcoin's along for the ride. And we're diving deep into that very connection today. We've got market trends, philosophical takes, even some hardcore technical analysis, all trying to figure out why Bitcoin seems joined at the hip to things like interest rates and bond yields. And get this, a while back, Bitcoin takes a tumble right when the Federal Reserve's reverse repurchase program, the RRP, starts making headlines. Coincidence? Our sources don't seem to think so.
It's funny, we think of Bitcoin as this separate thing, decentralized, right? But the way it reacts to these classic financial forces, it suggests there's a deeper link there.
Let's unpack this whole RRP thing, because I'm betting I'm not the only one who finds it a little perplexing. Yeah, that's the word.
Honestly, it's simpler than it sounds. Think of the RRP as this tool the Fed uses to kind of control how much cash is actually sloshing around in the system.
Okay.
They're basically offering banks a really safe, temporary parking spot for their money, which, for a bit, takes it out of circulation.
So hitting the brakes on the money flow.
Exactly. They want to curb inflation. RRP lever goes up. Want to encourage lending, boost the economy. They ease off. It's a balancing act.
Makes sense. Now, one of our sources, this guy, really knows his market. He's arguing Bitcoin's like a canary in a coal mine when it comes to this whole liquidity thing. He thinks this recent Bitcoin dip is directly because of the rising RRP. He even calls Bitcoin, get this, a leading indicator of dollar fiat liquidity. What does that even mean?
He's basically saying the amount of actual U.S. dollars floating around out there, it directly impacts Bitcoin's price. More dollars, people are more likely to take risks, invest in things like Bitcoin. The RRP pulls dollars out, makes things tighter, maybe makes Bitcoin look a little less appealing, at least for a while.
Okay, less cash, Bitcoin dips. And this source is making some pretty bold predictions. He's saying if the RRP keeps climbing, Bitcoin's in for a rough ride. Could even slide down to $50,000. Is that alarmist or something to actually pay attention to?
Bitcoin price predictions. Always a gamble, right? But this source makes a good point about those ripple effects from the Fed. They're particularly worried about bond yields. They say if a 10-year Treasury bond hits a 5% yield, it could really mess things up, destabilize the entire financial system. The Treasury might even have to step in directly.
Wow, a 5% yield on a bonds, enough to get the government involved. Suddenly, bond yields are sounding way more interesting.
Well, bond yields and how investors act, they're totally tied together. Think about it. If someone can get a decent return on something as safe as a government bond, they're less likely to gamble on riskier things. Startups, even buying a house, it impacts everything.
Wild how it's all connected. You've got Bitcoin, the rebel of finance, freaking out over the actions of the very institutions it's supposed to replace. Kind of ironic, isn't it? But hold on, because our journey doesn't end there. Another source has a completely different outlook. They're saying if you really believe in Bitcoin long-term, selling now because of these little dips might be a huge mistake.
Yeah, this source comes at it from a more philosophical angle. They see Bitcoin as a real alternative to what they think is a fundamentally flawed financial system, one they think is designed to chip away at your wealth over time.
So they're saying selling your Bitcoin for regular money now is like trading gold for paper money during a full-blown currency crisis.
Exactly. If you think about Bitcoin as not just an investment, but a safety net against a system you think is going to fail, those day-to-day price swings, they don't matter so much in the grand scheme of things.
So is it a risky gamble reacting to every Fed move? Or is it the future of how we think about money? It's a lot to wrap your head around. But there's more to uncover. We're about to throw another layer onto this whole Bitcoin bond market puzzle. Technical analysis. So we've got Bitcoin stuck between these massive economic forces and its own unique kind of thing it's got going on. But wait, it's this whole other piece we haven't even touched yet, technical analysis. And our crypto guru, they're saying this recent Bitcoin dip, maybe it's not the whole story.
This is where things get really juicy, especially for those traders, the ones glued to the charts. Our technical analysts, they're pointing out that Bitcoin, it kind of has a history, right? Like these cycles it tends to follow, especially around these halving events.
Halving. I've heard that term thrown around, but I got to be honest, I've never fully wrapped my head around it. Give us a quick explanation.
Absolutely. So every 4 years, give or take, the rate at which new Bitcoin is created, it gets chopped in half. It's like built into Bitcoin's code, a way to control how much is out there. And what our analyst is saying is, based on how Bitcoin has acted during past halving cycles, we're actually in a really good spot, like prime position for a serious price surge.
Wait, even with this recent dip we've been talking about, that's kind of wild. It's like deciphering a secret message in the charts.
It's a powerful tool for sure, not a crystal ball though. And get this, September, usually a rough month for Bitcoin, right? Well, this past September, highest average return for that month ever.
It's like Bitcoin's breaking free from its own history.
It's possible. But remember those big picture economic forces we talked about? The Fed, the whole bond market situation? Even if this breakout happens, just like the charts suggest, that stuff's still swirling around out there.
Like trying to predict where a leaf's going to land in a hurricane. You got the Bitcoin doing its thing, then the entire global economy going nuts at the same time.
No, that's a good analogy. Which brings us to the big question for you, our listener. With all this information, right? What does it actually mean for your own investments?
The million-dollar question. So we've got these competing forces, short-term pressure from the bond market, the Fed doing its thing, then the long-term argument for Bitcoin, like hedging against a broken system, and now these technical signals saying a price surge could be coming. It's a lot.
It really is. And this is where understanding the whole picture is so crucial. We can't just pick one of these perspectives and ignore the others.
So don't just focus on Bitcoin, like its tech or how many people are using it, but also don't freak out every time a bond yield moves a tiny bit. Find that middle ground.
Exactly. It's all about how these forces work together.
Like we need to be fluent in Wall Street language in this new decentralized world that Bitcoin's all about. So where does all this leave us? We've gone from the nitty-gritty of Bitcoin's code to these big philosophical debates about the future of money. What's the one thing you really want our listeners to take away from all this?
You know, I think the biggest takeaway is this. Bitcoin is stuck right in the middle of old school finance and this new world, this decentralized future. It's shaped by the systems it's supposed to disrupt, but it's also pushing back against them.
So it's not enough to just check the Bitcoin price on your phone or get excited about some new tech upgrade. We got to look at the bigger picture, right? The Fed, the bond market, all of it. That's how we really figure out what makes Bitcoin tick.
Exactly. And that's what makes this whole thing so fascinating to watch. Understanding how Bitcoin works on its own, but also how it fits into the global economy, that's key. Whether you're an experienced investor or just dipping your toes in, that knowledge makes all the difference.
That's what we're all about in these deep dives. No simple answers because, honestly, with something as complex and fast-moving as Bitcoin, those easy answers probably don't exist. It's about giving you the tools, the insights to help you navigate this whole new world.
Knowledge is power, right? When you understand these forces, how they're all connected, you're in control. You can make decisions that really align with what you believe in.
Couldn't have said it better myself. And before we wrap up, one last thing to ponder, something to think about as you keep exploring this space. We've talked about Bitcoin as this alternative to traditional finance, but what if it actually works? What if it becomes so successful, so intertwined with everything, that it starts to influence those very systems it was designed to replace?
Now, that is a really interesting question, the ultimate irony, or just the natural order of things.
Right, something to chew on. As always, all the sources we talked about, you can find links to them in the show notes. Thanks for joining us for another deep dive. Until next time, keep exploring.